Your first thoughts on when this started to really dominate the news flow, Andrew?
Well, it's quite surprising that the central state operation like this would suddenly be thrown to the wolves. But it's part of a longer process that China's been engineering of increasing defaults in the system. They've done this with some of the regional banks, and they've done this with some of the regional credits. And overall activity is up sharply in the courts for small business defaults. But obviously, to reach a company that's 61% owned by the Ministry of Finance is a little surprising. That would explain the $600 billion that or the 600 million, I guess, that Rebecca was reporting that they've pulled up for the Singapore bond. But I wouldn't be surprised if they let some of the foreign bonds default as a way to kind of put a little scare into the market.
Andrew, what do you think then? I mean, you touched on it there in terms of the government response. Is that as far as they go? They let some of the offshore bonds go? Or is there more punishment that needs to be meted out across the AMC sector here in China?
Well, first of all, the offshore bonds have no legal recourse to the onshore assets. We've seen that with the keep well agreements, which are basically handshakes, and then the Huarong juice case that occurred court ruling in December, which basically said, like, we have no way of getting onto these assets. So it's really a political decision. The AMCs are riddled with debt. They were supposed to be bad debt workout companies, and they're riddled with debt. I saw one paper that estimates that the 1.7% NPLs in the banking system should be 4 times higher because they've been lending trillions of dollars to the AMCs for these debt workouts. So basically, China's just shifting the debt around, and the AMCs are suddenly caught in the headlights. And obviously, there was some criminal activity involved there. So they're sick of this. The central government's sick of this. They're trying to put a stop to it, but they're debating how far they should let foreign investors hold the bag.
Well, some foreign investors are already holding the bag. You have what, $42 billion that Huarong owes locally and outside. As Tom was pointing out a couple of hours back, 17 billion of that actually comes to before the end of next year. But I guess we want to walk away from this conversation, Andrew, knowing, and hopefully we have more clarity, is the worst case that, yes, it's a bad thing, but is the worst case simply that some of these bondholders take the hit and nothing more?
Well, there's two issues. There's whether investors in the West get hurt, and there's a question of the systemic situation within China. I think investors in the West are going to get hurt, but probably not too much. It'll be a way for the PBOC to scare them and say, okay, you've got to start looking at these credits more carefully. Domestically, there is a systemic issue that they're not bringing up. Huarong, as I said, and the other AMCs, of which there are 5 main ones, and there are 65 local ones, have a huge amount of loans outstanding to the banking system, which are basically NPLs that have been shifted off the banks onto the backs of the AMCs. Now, if they address that, that is a systemic issue. They probably will continue to move things around and avoid reaching crisis stage.
So, Andrew, let me push you on that a little bit more then. What are the implications to the banking sector if you have to see some of these NPLs reabsorbed by the bank's balance sheets?
Well, ask yourself the question, where's the money coming from the Singapore bond? Where did they come up with that cash? That either came from the central bank treasury, which is unlikely. More likely, it came from one of the large SOE banks that loaned them the money. I'm just guessing here, but that's what I think, which means that they're basically continuing to fuel the bailout of these bad banks that have become bad banks themselves. I mean, they're becoming worse banks, basically. So the banking system, which is essentially fueled by the deposits of innocent people across China, are helping to bail out all these inefficient AMCs. And PBOC is scrambling to try to figure out a way out of this mess.
Yeah, I guess taking maybe 100 steps back, you were with Bank of China, of course. The reason some of these AMCs do exist was, to your point, they cleaned up the balance sheets to prepare them for those massive IPOs in the mid-2000s, right? And here we are right now, still talking about that debt, but it's just owned by somebody else. In terms of the restructuring that we might see, and not just on Huarong, Andrew, what do you think is going to happen or needs to happen so this doesn't happen again?
This is going to happen again. They can't really avoid it, I'm pretty sure. First of all, Western investors have to get smarter about what they invest in. They shouldn't be putting their money into this stuff. Second of all, the banks themselves have to start curtailing credit to the AMCs because AMCs are not doing a very good job of debt workouts. Their record is actually quite poor. And third of all, they have to address the whole NPL question of the banks themselves. I mean, 1.7% is a ridiculous number. It's like 10 or 20%. So, and how much are they willing to do any of this? They're forced to do something now because there's a crisis, but they're going to try to avoid any, doing anything until they have to.
How much of a weak link are China's trusts, Andrew? Is that the next area to focus on?
The trusts are a huge weak link with something like close to 30 trillion outstanding of debt. I don't think many of them have issued securities bonds to domestic or foreign investors. So they're going to be a little less transparent, a little less involved with the market. But they're undercapitalized and they've invested in a lot of local projects that are inefficient. So I'm very concerned about the trusts. The government's going to have to do something about that and fairly soon.
Now, in terms, I guess, as a final question, Andrew, I mean, we have growth coming out. GDP numbers are coming out in 17 minutes. That's going to show us something like an 18% growth clip. The economy's doing okay. Let's put it that way. At the same time, you have local authorities to a lesser extent tightening their grip over the property market. We had housing prices earlier. The reason I bring those two things up is I can't imagine a scenario that Beijing would come in and tighten their grip over the property sector. A lot of the bonds are actually held by developers, knowing that they have to deal with another issue with Huarong. What I'm trying to get at, Andrew, is are things actually not as bad as we think they are? Because Beijing is allowing some of the pain to really come through the system.
Well, first of all, the economy is doing well because of the authoritarian nature of handling COVID, and to their credit. Second of all, they are doing nibbling at the edges for allowing defaults to try to scare people, but they're not doing major tightening. This notion that they're tightening is not really happening very much. Credit is still flowing fairly freely. Third of all, the property market, I agree with you, they can't tighten the property market too much because that would kill a source of revenue for local governments and a lot of engine of growth. So I think there's going to be very little tightening on the property market, although there is some. I admit some of the three red lines and so forth they've come up are fairly significant. So I'm not seeing a lot of change. I'm seeing a slow incremental change, which is significant, but I'm not seeing the major tightening that some of the sell side is talking about.